Welcome to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm talking to you from New York City on the 15th of September, 2020. I do want to remind you I publish a newsletter, and its focus is primarily on the mining shares. It's Jay Taylor's Gold, Energy, and Tech Stocks, and miningstocks.com is where you can go for that. To sign up for that, Chen Lin's letter. Chen just scored big on another biotech, I understand, this week. He's doing extremely well in the biotechs. He also does well with energy stocks and the mining shares as well. What is Chen buying? What is Chen selling? Go to chenpicks.com for that. And Michael Oliver, it's olivermsa.com. We'll be talking to Michael in just a moment. But to follow Michael, olivermsa.com. And thanks to all of you for listening, making it one of the more popular shows in the Voice America Business Channel. I want to thank you also and encourage you to continue sending along your comments to questionsfortaylor@gmail.com. Questions, number 4, taylor@gmail.com. And we do need to thank our sponsors, because without them there would be no show. NV Gold, Hannon Metals, Irving Resources, Novo Resources, Sitka Gold Corp, Lion One Metals, Grand Portage, and GMV Minerals are our sponsors for this week's show. Before I begin talking about today's show, I do want to remind you that Investing 101 in the gold, silver, and the mining shares is scheduled to launch on October 1st. And to find out more about that course and what's involved in it, you can go to course.miningstocks.com, course.miningstocks.com. This course is meant for investors that are new to the precious metals environment and to the mining shares environment. But if you go to course.miningstocks.com, there's a list of the syllabus. There's a syllabus there that lists the topics that are discussed, as well as a short video that also explains what Investing 101 Gold, Silver, and the Miners is all about. Today's show is titled Prospects for the Dollar's Collapse. Dmitry Orlov is back after a long hiatus. He was with us last in 2014. Michael Oliver is back again after a 1 week's absence, and Dr. Quentin Henning rounds out the guest list today. In 2014, Dmitry Orlov discussed 5 stages of collapse in the USSR and how the U.S. was following a similar path toward destruction. In 2019, Dmitry opined that the last nail in the U.S. coffin would be a humiliating military defeat that would take the dollar and the U.S. down. Does Dmitry's move back to his native Russia, which he just recently moved back to Russia after living in the United States for quite a few years, does that suggest he thinks the timing of America's collapse is close at hand and that the future is brighter in Russia than the United States? That seems hard for us Americans to believe, but you could say that Dmitry may have voted with his feet. Those and some other questions we hope to gain answers to from Dmitry in the second half of today's show. And with gold approaching $2,000 per ounce, the timing couldn't be better for Novo Resources to commence gold production on its Beaton Creek project in Western Australia. Now the company has now secured a mill, and I do know that Dr. Henning is very optimistic about the margins, the operating margins for this project, as he has explained before. But we'll hear more from him today in the second segment, right after our first commercial break. But I'm happy to tell you that right now, Michael Oliver is back with us again, olivermsa.com. Thanks for joining me, Michael.
Hi, Jay. Good to be back.
It's always good to have you here, and I know that you have voted with your feet to a certain extent by going out to Colorado, I believe, somewhere. You found a fairly rural area, and it's interesting to note in chatting with Dmitry Orlov, I suppose that he would think that you may have made the right move, but we'll hear what Dmitry has to say about that a little later. You mentioned in some notes to me this morning that the virus is taking attention away from the swirly underway. I'm not sure. I mean, you use very colorful language. You paint word pictures that make your writing interesting for sure, Michael, but what do you mean by a swirly? Well,
if you go back to, let's start with Lyndon Baines Johnson, the war on poverty. If you visualized a totem pole, okay, with 2 snakes rising around the pole and rising up the pole, one being Democrat Party, one Republican. The ascendancy of statism, soft quote, loving, end quote, statism has increased since then. We're talking 50 years now, roughly, where that process has been underway, regardless of the intrusion of a few obstacles maybe put in the way by Reagan, and Trump likes to claim that he's, cut regulations and so forth, which can be offset by another argument entirely, what he's done to monetary integrity. But the process has been underway toward soft state socialism in the United States. Well, that has economic consequences, because when you tell people what to do rather than allowing them to decide what they want to do, assuming it's non-aggressive, you interfere with thought processes. You homogenize people. It's called coercive homogenization, is what I call it. And that leads to economic pitfalls, frequently like little heart attacks. And we've had them, if you go back to the 70s, about every 20 years, and now suddenly they're occurring about every 10 years. Where, the stock market will crash, we'll go into a deep recession, central bank will come in, they'll print all kinds of money, and try to get us out, which is to say do more of what they did before. So the cycle just keeps repeating, but now it's in a more rapid pace, I argue. I can see this in the technicals, things like gold. I think we're about to have a major upturn in food prices. We see it in the grains. I think the stock market has been topping. Don't be deluded by the NASDAQ 100, which is deceptive because of about 5 stock symbols that comprise the 48% of the front end of that index, and they're now in trouble as well. So I think the COVID virus, it deluded people into thinking, oh, that's the only problem. That's what it was. They don't see the bigger trend swirly unwinding. And, Russia went through this. I mean, they lasted, 70 years?
Right.
The Great Experiment. And then in the mid to late 1980s, it came unwound. Just whoosh. It's almost over. In terms of the state socialist aspect. You might have a dictator there in Putin, but you don't have a totalitarian. There's a bit of a difference, quite a bit of a difference, where he doesn't control all aspects of your life. I think, what's their flat tax rate, Jay?
17%. It was a few years ago anyway, and I'm saying I would love a 17% flat tax.
Yeah, it wouldn't
That'd be
surprise
wonderful.
me
That
that
would
Russia and China are the first countries to come out with a gold-backed currency.
Yep. Well, they're all going to. Yeah, that could very well be. I think we may get some remarks from Dimitri on that. I'm hoping so. Anyway.
Yeah. But anyway, all this has to do with markets too. But it's not just markets themselves. It's not just COVID. It's a big, broader picture of unwinding. And I think that the Fed is now committed to total destruction in terms of what they're willing to do to distort pricing in order to keep certain edifices up, like the stock market or the corporate bond market, the junk debt market that they're buying into, that they're willing to go to any extreme at this point. And I think that's an indication. Powell's tone of voice, his nervousness, is evident of what I'm talking about. He knows the swirly's coming, but he doesn't know the answer. He thinks more of the same is the answer. And I think that's going to ultimately unravel, and I think it's going to unravel quickly. I go with the chaos theorist on this. Incrementalism we may have seen for the last 50 years of a trend in one direction with heart attacks along the way. When it comes unraveled, if the error process is exposed and all the malinvestments come to the fore like debt, it won't be an incremental decline. It'll be a rapid ripping apart. And I think gold knows this. I think you're about to see that sort of behavior from the commodity asset category. And I think the stock market is falsely deluded itself into thinking, we can go up if they find a cure for COVID. I frankly think if they found a cure, you could short the market within about a week.
Yeah, right.
In other words, it's an irrelevant issue. It was just a temporary thing that exposed the underlying swirly that's underway.
Yeah, well, then people would have to start looking at the reality, the market realities, instead of COVID, I suppose. Well, Michael, if we're about to see inflation, we're about to see rising commodity prices, which I know you've been bullish on for some time. Do we need to see the dollar then in a decline? And where do you see the dollar right now? What are your technicals telling you about the dollar?
The dollar is, as far as we were concerned, topped in May of 2017 at a price of 99 on the dollar index. That's when it broke all of our parameters. It subsequently dropped another 10, 11 points down to about 88 dollar index, came all the way back up recently to 103, near its high that it made in 2016-17, and is now back down in the 95, 94, 93, 92 area. And
yes.
We're trading, I think, between 92, 93 right now. We've got some numbers at 91 applicable all year. If you hit it, we think we'll just go ahead and it will shed quite a few points at that time. But if we roll into next year and the dollar hovers around where it is now into next year, the number that will break it down the next leg will rise up to the market, such that if you're loitering anywhere around where you are now, expect the next dramatic leg in the dollar. Or it could occur between now and year end. I'm not sure which, but I do think it will occur. Now, that's really not a leading indicator, because if you look at gold since the 2018 secondary low, which is in the 1160s, has risen to over $2,000, and yet the dollar didn't contribute to that. Dollar weakness did not. So if you're waiting on the dollar to say, okay, all this other stuff's going to happen, well, it's sort of a laggard in a way.
Yeah.
And yes, I think it will create drama, and that will be wind at the back of gold and also of commodity prices when it occurs.
Yeah. What about, Michael, what about if we get a weaker dollar, then does that put pressure on interest rates? Does the Fed have to start printing more?
I'm looking for the government bond market, not to be confused with junk bond, corporate bonds.
Right.
The government bond market to have one more price surge, one more drop in rates. It could be dramatic, and I suspect it will be connected to a down leg in the stock market. I don't mean a crash, but a sharp down leg in the stock market from these, probably around these levels. However, once the bonds do that one more time, I think that may be the end of the bond market on the upside in terms of long-term yields on the downside. And at that point, T-bonds will be affected by the inflation that they see around them, and meaning higher yields. And of course, now, how would the stock market interpret higher yields?
Right.
Okay.
Well, one just wonders, though, if the Fed won't just absolutely just, with a deluge of money printing, just force the interest rates lower so they can't go up, and then confidence is lost in the dollar, possibly.
Well, yes, yeah, that would.
I mean, and nobody
also, the kind of inflation they want is like 2% plus. Well, dream on.
Yeah.
We argued that the Bloomberg Commodity Index has some numbers above it that as of next quarter, which is to say how many trading days away, if you're trading the Bloomberg Commodity Index up around 73.5, which is where it traded last month, if you trade back up to that level next quarter, you're likely to take the lid off and take the Bloomberg up to about 110. Well, you do the percentages on that.
Right. And who's going to want a dollar?
110, it's huge. It's a huge percent move. That's not 2%. So,
and who's going to want to own the dollar if you can't get any rates of return?
Correct.
So
Correct.
It's got to, it's really. So with the 30 seconds or so left here, Michael, you what do you think about the tech stocks? Because you wrote an article this weekend. You said the whoosh has begun, and you were talking about Apple and some of the other big-name tech companies.
I think they may have topped. Okay, in other words, the Microsoft, Amazon, and Apple, those are the three we're most focused on. In fact, we put out a report on the top day of the S&P and of the NASDAQ saying that if they dropped below certain levels the following day or two, and they did, the next few days they dropped, it would trigger an intermediate term downturn. Well, it was actually sharper than we expected. And I think that might, I think you can circle that high, which I think was September 2nd, and probably that was the top. Now, then the question is, okay, fine, now what does it mean about decline? When? And that's a more debatable issue in terms of the speed and so forth. But I think you've got to watch, instead of the S&P, watch Apple, Amazon, and Microsoft. And I think as those three go, the world goes.
Okay, we're going to have to leave it go at that, Michael. Thank you so much for your insights. Always appreciated.
Thank you.
Lots of things to keep an eye on.